Before we begin exploring the world of margin trading and leverage, it's important to note that this video is strictly for informational and educational purposes only, and it is not intended to serve as investment advice, financial recommendations, or endorsements of any specific strategies or assets. Imagine starting with just $1,000 in your trading account and having the potential to turn that into massive $10,000 gains through smart trades. But remember, the same power could also lead to devastating $10,000 losses in the blink of an eye. Welcome to the thrilling yet perilous realm of margin trading and leverage, where your opportunities are amplified, but so are the risks. So what exactly is margin trading? It's a powerful trading method where you borrow funds directly from a cryptocurrency exchange or broker, enabling you to trade much larger amounts of assets than your own capital would typically allow. For example, using your $1,000 as collateral to control a $10,000 position. This borrowed money lets you open significantly bigger trades, which means both your potential profits and losses are greatly amplified, making it essential to understand how your initial deposit acts as security for the loan. In practice, exchanges require you to maintain a certain level of equity to keep the position open, highlighting why caution is key in this approach. At the heart of margin trading is leverage, the multiplier that makes all this possible, commonly offered in ratios like 5x, 10x, 20x, or even 100x, depending on the platform and asset. Take 10x leverage as an example. Your modest $1,000 investment can suddenly control a substantial $10,000 position. So if the price moves up by 10%, you pocket a $1,000 profit, a full 100% return on your capital, but a 10% drop wipes out your entire stake. Higher leverage intensifies this effect dramatically. With 100x, a mere 1% price swing could double your money or erase it completely, which is why even tiny market fluctuations become high-stakes events in leverage trading. The main advantage of margin trading lies in its potential for outsized returns, allowing you to profit more substantially from market movements by controlling larger positions than your capital alone permits. To get started, you first deposit a portion of the trade's total value, called the initial margin, which serves as collateral, say 10% for a $10,000 position with your $1,000. You then open your leveraged long or short position on the trading platform, and from there, it's critical to actively monitor your maintenance margin level to prevent it from dipping too low, as this ongoing vigilance helps avoid forced liquidation and protects your funds amid fluctuating markets. That said, margin trading carries serious risks that can catch beginners off guard. What happens if the market moves sharply against your position? If losses push your margin below the required maintenance level, you'll receive a margin call demanding additional funds, and failing to meet it triggers automatic liquidation, where the exchange closes your trade to recover the borrowed amount, often at unfavorable prices. Crypto markets' extreme volatility exacerbates this, as seen in real-world events like sudden flash crashes or the rapid downturns in 2022, where countless leveraged positions were obliterated in minutes, depleting traders' capital overnight and underscoring why emotional discipline is vital. To succeed in margin trading, approach it wisely by never over-leveraging. Deeply understand all the risks we've covered like liquidation and volatility, and always begin with small, manageable positions that you can truly afford to lose. Prioritize continuous learning from reliable sources, implement solid risk management practices such as stop-loss orders and proper position sizing, and consider practicing on demo accounts. These habits will be your strongest allies in navigating this fast-paced, unpredictable trading environment effectively. In conclusion, this video is provided for informational purposes only and is not investment advice of any kind. Always perform your own diligent research and consult professionals before engaging in any trading activities.
If you want more crypto updates, market analysis, and breaking news, hit the subscribe button and turn on notifications.